All right, let's get right into it. The Bitcoin market right now is like a coiled spring. I mean, it's not crashing, but it's not soaring either. It's just stuck. It's locked in this incredible state of compression, what we're calling the great stalemate, where neither the bulls nor the bears can get an edge. And the real question is, what on earth happens when this thing finally snaps?
To really get a feel for the tension, you have to understand the pain that got us to this point. Since that euphoric all-time high back in late 2021, Bitcoin has gone through a brutal, just painful nosedive of 47%. Think about that. Nearly half of its value completely wiped out. A drop like that leaves some serious scars on a market.
Exactly. Bitcoin is trapped. After that massive crash, the market didn't just bounce back. Instead, it's grinding sideways in what analysts are calling a treacherous and highly contested range. It's this frustrating limbo where every little move up gets smacked down by sellers and every dip gets bought right back up. It's just completely stuck in the mud.
So where does that leave us? I mean, is all this tight, sideways action just the quiet before another catastrophic storm, another leg down? Or is this the hard, foundational work of building a solid base for a new beginning? What we're looking at here is a true tale of two markets, with really powerful arguments on both sides.
So let's start with the bear case, because you really can't look at Bitcoin in a vacuum. Right now, there is a massive macroeconomic storm gathering on the horizon, and honestly, its winds are blowing directly against assets like Bitcoin.
And this isn't random. It's a direct chain reaction of fear. It kicks off with geopolitical conflict, right? That threatens oil supplies. Well, that threat causes an energy shock, sending crude prices through the roof. That, in turn, forces central banks like the Fed to stay aggressive or hawkish to fight this really sticky inflation. And the end result of all that? A stronger US dollar, which basically acts like a vacuum cleaner for cash, sucking liquidity out of riskier assets like Bitcoin.
And listen, this isn't just some abstract theory. Traders are watching the calendar like hawks. You've got key dates like the inflation data on March 11th and the Fed's interest rate decision on the 18th. These could be the exact sparks that break this stalemate. You throw in potential crypto regulation with something like the Clarity Act, and yeah, it's pretty clear why the market is just holding its breath.
So the big picture, the macro picture, is definitely challenging. But when you zoom in and look at the charts, the view for the bears gets even clearer. From a pure technical analysis standpoint, the market is showing some serious signs of being structurally broken.
And one of the most ominous signals out there is something called the death cross. Yeah, it sounds dramatic, I know, but it's a technical event traders take very, very seriously. It's basically when the short-term price trend dips below the long-term trend. Now, it's not a crystal ball, but historically, it has shown up right before some of the market's biggest and longest downturns.
And it's not just Bitcoin. Look at the broader crypto market. It's a bloodbath. An absolutely abysmal 7.38%, just over 7% of all cryptocurrencies are trading above their long-term trend line. When more than 92% of an entire asset class is this beaten down, it screams systemic weakness. There's just nowhere for capital to run and hide.
To try and get a read on this market psychology, analysts use momentum indicators. Think of it like the tachometer in your car. It doesn't tell you your speed, but it tells you how fast the engine is revving, the acceleration. These indicators measure the speed of price changes to see if the market is overbought, meaning the bulls are running out of gas, or oversold, where the bears are getting exhausted.
And right now, that bearish momentum is completely dominant. Every single time the market has tried to rally, every time the price tries to punch upward toward that key $74,000 resistance level, it has failed. These failures have become what traders call bull traps. They suck in hopeful buyers who think this is the one, right before the price gets slammed back down again, just reinforcing that nasty bearish trend.
Okay, so that's the bear case. And look, it's grim, it's compelling, and it's all based on real data. But now, we pivot. Because underneath all of this short-term noise, all this chaos and fear, there's an incredibly powerful long-term and fundamentally bullish force that is quietly building steam.
This number right here is absolutely monumental. Just recently, the Bitcoin network hit a truly historic milestone. The 20 millionth Bitcoin was officially mined. Now, this isn't just some random number. It marks a profound turning point for the entire asset.
Just think about what that really means for a second. With 20 million coins now mined, over 95% of the total finite supply of 21 million Bitcoin is already out there. That tiny little slice that's left, less than 5%, is going to be slowly released over the next 114 years. Bitcoin is becoming verifiably, programmatically scarce right before our very eyes.
And all of this leads directly to this quote from the analysis, which just perfectly captures the entire bull thesis. Bitcoin's annual supply inflation has now officially dropped below that of physical gold, cementing its position as the hardest form of mainstream money currently in existence. This provable scarcity is the bedrock, the core narrative for every long-term investor.
So here's where it gets really interesting. You have this massive tension. You've got the current price hanging around $67,000, being held down by all those bearish things we just talked about, but then you have these long-term valuation models, like the stock-to-flow model. This model values an asset based on its scarcity, and it suggests the average price for this cycle should be closer to $500,000. That is a gigantic gap, and bulls argue it might be one of the single greatest buying opportunities in the asset's history.
So here we are. You have the gathering storm from the bears, clashing with the bedrock of scarcity from the bulls. The market is now at a truly decisive crossroads, and analysts believe there are three very clear paths that can emerge from this stalemate.
And the battle is being fought between two crystal-clear lines in the sand. At the bottom, you have the macro support floor at $60,000. That's the level the bulls absolutely have to defend. And at the top, you have that resistance ceiling near $74,000. That's the wall the bears are protecting. Whoever wins this battle will dictate the next major move for the entire market.
And here's how the source material is breaking down the odds. The most likely scenario, sitting at a 60% probability, is the base case. More of this painful sideways chop, just grinding between those two levels. The bearish case, with a 25% probability, is a catastrophic failure of that $60,000 support, leading to a sharp, painful sell-off. And the least likely, at just 15%, is the bullish case, a powerful squeeze above $74,000 that would completely invalidate this whole bear trend.
And that leaves us with the final critical question. We are watching a live battle unfold between two totally opposing forces. On one side, you've got immediate, real-time fear driven by geopolitics, inflation, and those broken-looking charts. And on the other, you have the long-term, mathematical certainty of Bitcoin's ever-increasing scarcity. The outcome of this great stalemate will come down to which of these two powerful stories ultimately wins out.